Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 25th of November. Starting off with Beowulf Mining, where you see that we've had a break of that trend line there from back in January. That was around the 4 pence level, and good progress since then. Sort of sideways consolidation above the 50-day moving average over the last couple of months. Looking for the shares to head higher within a rising trend channel, perhaps up towards the 7.25 pence level. That would be within the rising trend channel that I'm attempting to draw at the moment. So above 5 pence, looking for 7 pence on Beowulf, and obviously if you want to trigger there on the upside, maybe an end of day close through 5.4, 5.5 could be the start. But it looks like a nice slow turnaround is in place at Beowulf at the moment. Stock which has raised its money and done its thing is Bizant, and here we've had another bounce off the 50-day moving average at 0.15. Above that, we're looking towards the 200-day moving average at 0.21, perhaps by the end of next month. Clearly, the turnaround there came with the break of that resistance line there from May. That was around 0.12, and we've slowly improved from that point. Onto a stock which has been rather horrible to its legions of fans, Chill Brands. Here you can see that although we broke that line of resistance from July last week, or earlier this month, we've had the shares come back to test the breakout level, so around 12.75 pence, something like that, 13 pence rather, and the big thing here really to wait for is an end of day close above the 50-day moving average at 19 pence. If we can get that, that might be the first sign that the shares are ready or intent on a rather more extended recovery, perhaps up towards the 30 pence area, but still a little bit early to get to think that the worst is over for the shares, even though we bounced from the what was the old resistance on the way down around 13.5 pence. Over the course of this week, so that is helpful, even though we haven't actually gone too far to the upside yet. On to Eurasia Mining, which I haven't looked at for a while. You can see that the overall pattern here seems still to be the rising trend channel from last year, heading up towards 45 pence. That would be that line of resistance, which I'm just sort of adjusting there. Floor of the channel looks to be around the 22 pence level, so above 22, looking for 45 if you're a fan of the shares. If you want a near-term trigger, then maybe an end-of-day close through 25.5 or so. The latest resistance could be the thing to wait for or use as a potential technical trigger. On to Gunsynd, which has certainly performed well on the fundamental side, and I suppose the only disappointment here is that we haven't really made too much progress on the technical side. We've still got that resistance around 1.1 pence. Need to break that on an end of day or a weekly close basis. If we can do that, then it's back up towards the 1.5 pence area, but maybe it's worth being a little bit more patient to see whether the fundamentals will eventually seep into the technicals. Moving along to My Health Checked, which has had a bit of a recovery given the COVID nightmare that's brewing in Europe at the moment. Here we've got that line of resistance from April. That's around the 2.5 pence level, and above that we could see the shares trying to fill the gap down from last month through to 3.6 pence, perhaps by the end of December. Stock which doesn't normally get a look in here, but is here today, REA Holdings. Couldn't resist this one with the gaps to the upside and the near vertical move for October. It does seem that the shares are in a rising trend channel, which could potentially head towards, I suppose, the 130 area. That would be the top of that rising trend channel from March, and that's valid while we hold above recent support around 92 pence on an end-of-day close basis. On to Sareum, which was something of a hero earlier in the year, but has sort of delivered something of a pie in the face for traders, especially to start this week. Difficult to see why and how the shares managed to fall right down towards the 3 pence area earlier this week, but we bounced back like a cork in water and above the 200-day line at 5 pence, looking for a retest of the main post-September resistance around 7 pence by the end of next month. Finishing off with Velocis, which has had some kind of, well, some rather spiky price action in the recent past. We did have that massive spike towards 17, 18 pence earlier in the month. Interesting that now old resistance has become new support around 8 pence, and while we're above that, looking for at least a return to resistance on the way down, which was around the 13 pence perhaps, 13 pence level perhaps by the end of next month. That's it for me today. More updates tomorrow.